Welcome. I'm your host, Henri Arslanian, and welcome to the Future Money Podcast. My goal with this podcast is very simple. It's to go deep in some of the biggest ideas, trends, and developments we are seeing in the field of crypto, and hopefully empower you with this information and then let you make your own decision on what their impact can be on the future of finance and the future of money. To do this, I invite each week one of the leading figures of the global crypto community to have a one-on-one conversation amongst crypto aficionados and discuss some of these topics. But before I introduce my guest today, I really want to thank the over 500,000 of you who follow me every week across my various channels, and especially for all the support for this podcast. We have now listeners from over 100 different countries, thousands of you who are listening to each episode. So really thank you very much for all your support. If you like the show, make sure to give it a 5-star rating at the end because it really helps with discoverability and helping others discover and learn more about the field of crypto and digital assets. Now, let's kick off the show. I'm very excited about my guest today, Michael Lau. He's a Senior Vice President, the Global Head of Sales at Bullish. And we'll talk at length about what Bullish does and how it's different today. But one thing I want you to know about Michael that people don't know is that he's very passionate about music. He really enjoys playing instruments, in particular guitar and some drums, and really exploring and listening to new songs. So here we go. See, people in crypto, we have other passions outside of crypto per se. Michael, great to have you with us today on the Future of Money podcast. And great to have you with us to talk about the Bullish and the whole ecosystem.
Thanks, Henry. Super excited to be on the show.
Before actually we go down, and today actually one of the things I want to discuss is really the interaction of CeFi and DeFi, how they're coming together, what Bullish does, how really you guys trying to bridge the gap between the two worlds, and also broader trends we're seeing with institutional investors, particularly from a trading perspective as well. But before we jump into all that, I think it would be useful if you can share with our audience about your background, your personal background, how come you ended up at Bullish, and really your journey into crypto and the broader industry.
Yeah, sure. Thanks, Henry. So my background is I'm Canadian, born and raised in Toronto. I actually lived there up until university where I studied engineering. And at that time, kind of decided to pick up and, explore life over here in Asia, kind of moving here to Hong Kong about 13 years ago. My background, I guess, in terms of career, started off in traditional finance, working in equities and different kind of brokerages and investment banks. And then, about 2 years ago, I was kind of given the opportunity to kind of, I guess, rethink where my career might take me. And I guess the inner geek in me was always fascinated by, the idea of innovation and technology. I guess that's my engineering background. And, I think with the benefit of hindsight and the opportunity to redo my career, I probably would have chosen like something in the internet space earlier on. And so when I was told, here's this chance to kind of join this, new space, fast growing innovation. It's got technology, in terms of the way that we're thinking about changing business models, the way that we're kind of changing the way that things work. I thought, here's the chance to give it a go. And so I jumped into the crypto industry 2 years ago, specifically to build and be part of the team here at Bullish.
So actually, Michael, can you share with us what is Bullish and really what you guys are trying to do and how it's different from other exchanges out there in the field?
Yeah, so Bullish is, in our perspective, a new breed of exchange. It's the kind of place where we've brought the benefits of that more traditional centralized exchange in terms of a central limit order book and married it together with some of the innovations that we found in decentralized finance, like automated market makers and liquidity pools. And I think the idea here is to be able to provide just a different kind of venue. We saw a particular, I guess, opportunity in terms of being able to provide different kind of, I guess, proposition to the market around how people think about liquidity or access to liquidity, but specifically underpinned with some kind of real technological difference, which is where that automated market maker and liquidity pool come through. So, at a very kind of high level, we are an exchange as kind of our first product. Bullish, I think, has a broader vision of, over time, creating even more things within the ecosystem. But, Bullish is this idea of being able to bring together the benefits of two worlds to hopefully, power the industry to continue moving forward.
So can we go a bit further level down, right? So obviously, could you share with our audience how the traditional automatic market makers and liquidity providers work in like traditional DeFi, if there's a lack of a better word, and then how are you guys trying to combine this within this new kind of centralized entity, and the differences between both, please?
I think the way to think about automated market makers is that it's a form of programmable finance, right? It is this ability of taking, business logic and coding it into a way that, people can interact with, the technology and the finance and capital that it's integrated with. And so I think the way that, you think about typical automated market makers, there's a liquidity pool or, some mechanism that allows people to deposit assets into it. And then that kind of programmable finance takes it forward. So we thought, this was a great way to be able to provide liquidity to the market, especially if you've got the mechanism and you've also got the assets in place, right? And so we actually ventured down this path about 2 years ago, before DeFi was actually as popular as it is now, right? We kind of looked at this as, an opportunity to, again, kind of use technology to differentiate our offering. And, when DeFi got really popular, summer of 2020 and onwards, what we saw was kind of this validation of, I guess a combination of decentralization and also, financial innovations from programmable finance. But as we kind of started speaking to more and more people about this space, the one thing that we knew was, or we picked up was that, institutions or institutional capital was kind of still on the sidelines because they felt that, the decentralized part of DeFi or these kind of DeFi offerings was a little bit of a deterrent when you have this, obligation to your clients around where your money gets, or your funds get commingled, how you think about counterparty risk and how you think about scaling. And so we saw this kind of adjacent opportunity by taking the innovations within this space and putting it into a centralized venue that meets the criteria of what institutions are looking for. It's kind of like this ability to effectively open up, hopefully a new opportunity or a new wave of money that comes through that is, looking for access and exposure to this innovation, but needing some of these requirements that, their clients are asking for or that they're obliged to meet.
And it's interesting because I think we're thinking about, for example, Bitcoin, that in theory, it's fully decentralized. I could send you Bitcoins right now peer to peer, but many people would rather trade with centralized exchangers to address some of the issues like KYC and others and price discoverability as well. So I think it's interesting what you guys are doing where you've taken the features of decentralized exchanges, but kind of put this kind of into this capsule, if you want, where it really gives a lot of the elements that institutional investors would be interested in. KYC probably is one. But can you actually can you maybe share with us a bit more on, let's say, on a practical perspective, right? So if I go today on a DeFi exchange, yes, there's an AMM, there's liquidity pools, like I can be a liquidity provider, and obviously I get compensated for the assets that I'm putting there. From your perspective, and also from a bullish perspective, for our viewers, can you explain to me how does it work mechanically, right? So if I'm providing liquidity, do I get compensated for it? I know you guys have an order book as well, and how does that practically differ from somebody who's going to go on a Uniswap or Aave to go trade?
Yeah, that's a very good question. So I think there's kind of two parts to the question, right? I guess it depends on, to a certain degree, which angle you're coming at the exchange with. If you're coming at it from a trading perspective, what we offer is this ability, to interface with an automated market maker that has, a fairly large amount of assets that are kind of behind that right now. And at the same time, offer the ability to kind of combine that together with what you typically get out of a central limit order book, in that you can have people posting bids and offers from third parties. And the way that we've done that is we've put this together in what we call a hybrid order book, where the automated market maker is kind of there, posting quotes kind of through the continuum of prices, but also at the same time, any third party that posts, a resting limit order, it sits on top of the AMM. And so what you're getting from, Bullish as, let's say a trader engaging with the order book is you're getting kind of two sources of liquidity. One in particular that is fairly, I guess, kind of, traditional in terms of what you would experience in a central limit order book and at any other centralized exchange, but then also this differentiated automated market maker that operates differently, right? And so just going a little bit deeper into kind of how the AMM works, the automated market maker, it quotes prices based on two things, really. It quotes prices based on the inventory of assets that are in the liquidity pool. And that shows, for example, how deep we can go in terms of the order book. But at the same time, it only changes its price when it's actually traded against. So there's no external data source that's pulling in data from somewhere outside, or Oracle of some sort that's updating this as we go. If external prices change elsewhere and nobody trades on our exchange at that same moment, the price won't change. And so it just offers a different, kind of source and a different way of accessing liquidity. And I think the other thing too about it is that, the depth of assets, the amount of assets that we provide in the liquidity pool change the depth of the liquidity, in the sense that it also then requires a certain amount of volume for it to actually, move the price, right? Which means that you've got, a certain level of, price slippage that is kind of hopefully abated because of the fact that we've got deep markets. And so the idea here is that there's a bit more reliability in the way that you're able to, hopefully in more volatile times, be able to ensure that you've got that execution, or at least the cost of execution, based upon, I guess, the way that we algorithmically run the automated market maker. So that's kind of the trading angle and kind of what's different. If you take a look at the other side of things, right? So if you're a depositor into these liquidity pools, the idea here is that you're generating some kind of, I guess, fee or yield based upon the activities of the market maker, right? So the earnings that are generated from the automated market maker feed back. What's different here at Bullish is that we've done that, but also we've kind of baked into, this liquidity pool a secondary function, which is actually margin lending. And so the liquidity pool does two activities. And when someone borrows and we're lending out from the liquidity pool, there's an interest rate that is charged against that as well. And that earning comes back. And so, if you're a depositor in these liquidity pools, what you're seeing effectively earnings generated from two somewhat different activities. And that hopefully, increases the utilization of these assets to be able to generate that earning.
Yeah, very interesting. I can see how you guys try to kind of address some of the drawbacks of traditional DeFi platforms by some of these improvements. Michael, one of the biggest, I would say, unknowns or elements that people don't know about DeFi exchanges is the risk of impermanent loss, where, despite you're providing liquidity to a certain pair, you may still lose money, literally just because of the change in the price of the asset. Can you maybe share with our audience what is impermanent loss? And I'd be very curious to understand from a bullish perspective, how you guys are dealing with that particular issue from that perspective.
So impermanent loss is permanent until you actually action against it, loss, or I guess kind of paper loss, if you will, of kind of like looking at mark to market, right, of your assets, when you first deposit and then when you withdraw, right? And so, there's a chance, for example, whereby, the value of the assets, from when you start and when you withdraw change, and that could be up or down. And I think it's fairly inherent in terms of just how liquidity pools work. From our perspective, I think that, we're trying to create this kind of new, I guess, kind of combination of earning as it relates to the deposits and liquidity pools through both the market making component as well as the margin lending. But I think that there's kind of an underlying, I guess, kind of question here, which is I usually like to think about, Clayton Christensen's idea of a job to be done, right? When you're looking at a particular, product or particular need, there's a certain job to be done. And it may not be, for example, that you just simply want to hold, 100% in a certain asset and ride it all the way until, a certain date in the future. It could be a combination or some kind of portfolio view or some other way of looking at kind of how you want to manage your assets, but also factoring in things like, what's the risk profile look like? What does it look like in terms of the mechanics of how we actually do it? And that's why, for example, not every single asset reacts the same way, even if it starts and ends in the same point. And so in terms of the way we're thinking about it, the way that you look at a liquidity pool is kind of thinking about, the fees that are generated in between those 2 points. So you're thinking about, let's say, the total distance traveled, right? If you look at the price chart, as opposed to simply the displacement of where you start and where you end. And if you think that, for example, there's a chance that that distance traveled is not a straight line, then there's an opportunity there that hopefully, when you compare that towards, the, I guess, potential and permanent loss of, exiting with the different, I guess, underlying values, there are some earnings there to kind of help you consider whether this is a good choice or not.
Very, very interesting. And actually, on this point, obviously, when you talk to crypto funds, I'm sure they're all familiar with DeFi and all the particularities of the DeFi world. I'll be very curious to hear, Michael, what is the feedback you're getting when you talk to traditional financial investors, traditional hedge funds, traditional asset managers? When you tell them about DeFi, what is the reaction you're getting, and what is their level of knowledge you think overall about the decentralized ecosystem?
Yeah, so I'd say what's interesting is that, I've been speaking to, I guess, folks in this space over the last 2 years, and I'd say that the sophistication level of the questions have certainly increased over time. I think that people are being, a bit more, have gotten the knowledge themselves, and also to a certain degree have been in more conversations about this. So I'd say that we're kind of getting to the very mature exploration stage of a lot of the traditional finance space. And as a result, when we start to get questions, it's usually something fairly technical, actually. People want to understand the mechanics of how things work. They want to understand, how to be able to access it. They're trying to either rethink the way that they're approaching it or trying to figure out how it fits into their framework or evaluation of the space. I'd say that when it comes to Bullish, there's a lot of things around, how is it different? Particularly, is there a technological difference in the way that we operate than simply, the other hundreds of exchanges that are out there? And so I think there's certainly a lot more of these very intelligent questions, which to me, I guess, kind of feels like there's this, I guess, a growing interest to enter the space in terms of the amount of investment and focus and energy that's been poured into understanding it.
So, Michael, how do you see the interaction between centralized exchanges and decentralized exchanges? You think the dynamic between them will be one where they'll be collaborating, they'll be competing, or they will both exist in parallel for the foreseeable future?
Yeah, that's a good question. I think I kind of like to go back to that idea of jobs to be done. I think there'll be certain jobs that centralized exchanges will perform better. Right now, if you look at the way that, technology is, when it comes to performance, when it comes to things like being able to do KYC and AML, these are things that I think CeFi, exchanges just do a lot better in their current state. But then there'll be some jobs that, the decentralized space in terms of DeFi, will be able to do better. And so it's really a question, I think, of what are investors, what are traders looking for in terms of their pursuit of whatever their end goals are. And I think that's kind of where there is, to a certain degree, a little bit of coexisting at this point in time, serving different kind of needs, serving different markets. And I think at the end of the day, it'll come back down to what do clients want? What do investors and what do traders want? And that demand will kind of play out. I guess kind of what the next state looks like in the future.
And Michael, I mean, you obviously deal with investors around the world and traders around the world, but obviously you're based in Hong Kong. Do you see a difference between the type of questions or the openness to risk or other particularities that you're seeing with funds or investors in Asia compared to those you're talking to that are in other parts of the world?
It's fairly typical of, I think, general, I guess, finance and capital markets. Like there's a lot of local environment influences to the way that you think or the way that you approach different things. So yeah, there's certainly, elements of that. I'd say that there's certainly an element of, openness to technology that differs depending whether or not, you're coming from, one side of the world or the other. If you take a look at Asia, for example, in the most recent couple of years, there's been a tremendous amount of innovation that's happening in technology. And I think that sense of adoption as a result of it, certainly a level of openness. There's always been discussed, I guess, kind of the idea of certain markets or certain, I guess, segments of society where, you leapfrog technology, right? Because, the environment and where technology lands and how it's introduced to that particular group of people is just in a different setting. And so as a result, you just have easier, I guess, kind of adoption towards that. So I'd say that's one of the key things that I've noticed, kind of looking across both sides. But I'd say that, more so than the differences, just like, I guess, kind of how global in nature, crypto is, there's a lot more similarities. There's just an enormous amount of passion and innovation, really smart brains solving really interesting problems in the space. And I think that's pretty uniform across the world. And I think that's also what makes me so excited about this space. It's just that there is this kind of, global nature to what we do that is so progressive.
What is the biggest, let's say, question or roadblock when you're talking to these traders or funds who are looking at entering the crypto space? What is the biggest roadblock you're seeing on their side that is kind of slowing down or blocking their entry to the ecosystem?
Those that, for example, I guess have more responsibilities and obligations externally, right? Whether fund managers managing external money, or if they're a pension fund, or those that kind of have that obligation do require a lot more out of the funds that they, or I guess kind of where they invest their money or where they interact with, and a lot of that I think is kind of part and parcel to what is being demanded of them. And as a result of that, I think that there's just a lot of different factors that need to be considered. Where we've seen, for example, crypto just accelerate in terms of the build out of the technology. I mean, it's certainly something that attracts a lot of people, but at the same time, it's a lot of these other factors, right? So things like KYC and AML, and things like, for example, just understanding your counterparties and how do you assure that there's the right risk management frameworks and processes in place. So I'd say a lot of those things, which are quite, I guess, kind of mature in other asset classes, that same level of requirement is kind of being brought into this space, and because it's still in the early stages, I guess the friction comes from the fact that it's not nearly as, I guess, kind of had the same amount of time for it to grow into meeting these demands, and so that's kind of where we're seeing, I guess, more of that kind of friction come through.
At Bullish right now, obviously you guys are combining some of the features of CeFi with DeFi, but who do you see as your competitor down the line? Do you believe you'll be competing more against centralized exchanges or with the decentralized exchanges that are out there?
Right now we're thinking about how we can be additive to the space, right? Like the one thing that we kind of like to talk to our clients about is how, given the nature of how Bullish operates, given the nature of how we provide liquidity, we would like to argue that there's a necessity of adding Bullish to your portfolio of exchanges where you're working. And I think that, because of the fact that it's, unique in the way that we provide it, and in the fact that, right now the liquidity pools are backed by, the Bullish treasury, these are all unique forms that I think are additive overall to the market. And so I think, the way that we're kind of looking at it right now is a bit more of growing the pie rather than kind of, taking on a larger slice, and so as a result, I do think that, the way that we're, certainly competing against is kind of like, I think more of just the friction that we talked about earlier, right? The friction around, the desire to enter the space, but the lack of the infrastructure or the lack of the ability to meet those kind of more institutional requirements, and, therefore capital moving somewhere else or not being deployed in the space. And that competition, I think, resides more with them. And so I feel, to a certain degree, we're going to be continuing to operate in that fashion for a while the space is, continually growing, and we're seeing more people, peering in and then actually jumping in.
You raised the topic of the Bullish treasury. I think it's very interesting. I remember when the press announcements came out on Bullish. This is one of the things that was very interesting. Can you share with the audience what is the Bullish treasury, and also what is kind of the interaction with Block One and some of the other entities that were involved in the kind of the making of Bullish?
Yeah, so I'd say that when Bullish was announced, what was announced with it was a treasury that was quite surmountable in terms of its size. I guess depending upon, at any given point, there's a significant amount in terms of the billions of dollars in digital assets and cash that sit here. The way that we think about it is that as we bootstrapped this mechanism, we were looking for a way to deploy this treasury. And so then that way, we not just only have the mechanism, but also the assets that combined provide that deep liquidity. And so, when we started the exchange, we started with, initially small deployment back in November. And up until now, we actually just made a tweet and an announcement that we've now got approximately $3 billion of digital assets and cash in these liquidity pools to provide, a substantial, amount of liquidity that comes from, the automated market maker. That's resulted in a pretty amazing journey. So since, basically the end of November until now, we actually just announced that we've hit $10 billion US dollars of total trading volume within the first 3 months. And I think there's a significant part of, validation there in terms of the combination of these two things, right? The mechanism and technology, as well as the ability to put those assets to work.
Very, very interesting. And one of the topics we're seeing more and more is a lot of the traditional exchanges, the traditional equities exchanges that we all know about, and even sell side firms are all trying to get into crypto one way or another. Based on your experience and your knowledge of the crypto ecosystem, what do you think is going to happen with these sell side firms and traditional exchanges who are entering the crypto space? You think they will succeed? You think they're just too slow to adapt and they don't have the agility of crypto firms? Or you think it's a lost cause? They will just need to acquire some crypto firms or work with them. What's your view on how the landscape may look like in a couple of years when it comes to sell side firms and traditional exchanges and crypto?
If you look at, for example, just kind of the landscape of, how adoptions happened, right? I think that, if you kind of trace, there's this idea of like a main kind of trajectory of technology. You've seen kind of blockchain enable a new asset class, which enabled a new industry, and the kind of just continues to grow. The one unifying thread around this that I've kind of observed is just where it's digitally native, we see like the fastest rate of adoption around this stuff. And so I do think that, for example, right now, the players, the communities, the companies that are succeeding in this space are the ones that are more digitally native in terms of how they think about operating, how they think about, the various components of the industry, whether that's the infrastructure or the asset class themselves. And so I think to a certain degree, if you're coming in, with a legacy of another asset class, another industry, another way of thinking, and you can't pivot, or adapt to this, you're going to find it hard, right? To be able to compete, to be able to, kind of pivot, and particularly in an industry that is evolving as fast as this one, be able to kind of continue at the same pace. And so, it's not to say that it's not possible, but I think that there's certain elements of that which would be needed in order to be able to keep pace with how the industry is growing.
Absolutely. I think that's one of the biggest challenges for a lot of these traditional firms, right? The pace and also even hiring talent, becoming very difficult to convince somebody young now to not come and work for a place like Bullish or any other crypto exchange versus going for a traditional bank. It's obviously, from a hiring perspective, raises a lot of challenges. Let's put it that way, to be polite. So, yeah. Michael, but I can't believe we're already out of time. But we have the fire round question with us. My favorite Bell is with us. Michael, I'm going to ask you quick questions. I need 1 or 2 word answers, and my Bell here will be here to keep us honest and on time. Hope you're ready.
Okay.
Let's do this, Michael. So, what is your one advice to anybody getting into the crypto space?
Learn as much as you can.
Learn. Here we go. What have you found the best place to find talent for crypto?
This is supposed to be quick answers. I'd say people who demonstrate technical ability.
Yeah, beautiful. Good answer. So, Michael, if you're not in crypto, what other industry would you be in?
I'd be in music.
Music. Here you go. Talking about music, what if there is one band that you love? Which band would it be?
I'd say any kind of like early 2000s hip hop.
Oh, wow. Of course. We even at the Super Bowl recently as well. I love that the halftime show with on that side as well. What's your favorite thing to do? You're based in Hong Kong. What's your favorite thing to do in Hong Kong?
I'd say I really enjoy hiking. It's a lot of nature in Hong Kong that people don't really know about.
Exactly. Good one. What is the one course you recommend every student takes that you wish you had taken in university?
Critical thinking.
Wow, here we go, man. We can have a whole session on that answer, actually. So, If what is the region that is exciting you the most for crypto? I know you mentioned before crypto is global, but what is the one region that is exciting you the most?
I'd say Asia is still quite exciting. Yeah.
Yeah. What do you do on your weekend when you're not working on crypto?
Hanging out with my family.
There you go. What is your favorite YouTube channel or Netflix series that you watched recently?
Any of the Star Wars ones.
Of course. Here we go. If you could hire one fund manager, any hedge fund manager in the world as an intern, who would you like to hire?
I mean, I think that the better answer is who would I like to learn from? Maybe the likes of one of the early crypto hedge funds that have been around for a while.
Yeah, great, absolutely great answer. Hey, Michael, last question today for our Future Money podcast. If you could have lunch or dinner with one person, dead or alive, lunch or dinner with one person, dead or alive, who would you have lunch with?
Man, you asked very thought-provoking questions for a fire round.
Lunch or dinner, who do you have it with?
Oh man, I'd say right now, my family over in Canada. Given the fact that we haven't been there for 2.5 years.
Exactly. Well, great answer, Michael. Great to have you with us today. Where can people find you? How can they learn more about yourself and Bullish as well?
Yeah, so you can find us at bullish.com. You can follow us on Twitter. We have a Bullish handle as well, and also on LinkedIn. Would love to kind of see, people check us out and see, for themselves what we're about.
Excellent. That was Michael Lau, the Senior Vice President, Global Head of Sales at Bullish. Thank you, everybody, for being on the show today. Again, please make sure to click subscribe and give us a 5-star rating if you like the show. A new episode will be released every other week. And really, these ratings really help us with discoverability and helping others to discover the show. Again, if you want to stay on top of the latest developments on crypto and the future of money, make sure to follow me on LinkedIn and on Twitter, especially for my weekly Crypto Capsule show, and also for my weekly newsletter, The Future of Money, where I share the 3 big ideas you need to know each week. One thing that Michael talked today about is learning as much as possible, education. If you want to learn more about crypto, or you have friends and family, you want them to learn more about crypto, make sure to check out my YouTube channel, where I have a lot of educational videos, as well as the past interviews, and the one we did with Michael will be on as well. And now all my educational content is available not only in English, but also in French, Spanish, Arabic, and Mandarin Chinese as well. And for those of you interested, make sure to check out my latest course, Introduction to Bitcoin and Crypto Assets, on the Udemy platform, where I explain in 90 minutes. I know you guys are busy, so I'm bringing it down to 90 minutes. All the latest global trends you need to know on topics from Bitcoin, Ethereum, DeFi, stablecoins, CBDCs, Web 3.0, Metaverse, and many, many others. So thank you once again for joining us on this episode of the Future of Money podcast. And thank you, Michael, for being with us as well. And see you all next time.